Warning signs that you're adding too much debt. This is Ken Boyd. So if you're looking for a get out of debt plan, you may feel like you're literally being hunted. It's very stressful and the plan may seem impossible, but you need to ask yourself a basic question. When it comes to personal finance, are you reactive or proactive? Many of us tend to be reactive in a crisis, and you don't take preemptive action to address a potential issue. By assessing the possible risks as they occur, you're more likely to create a plan and lessen the financial problem. So, to get it out of debt quickly, the first step is to understand where you are now. So, I'm going to look at three scenarios that can really damage you financially and how you can work to avoid them or minimize them. The first is dealing with a personal injury. You have an injury that affects your ability to work. The proactive step is to prepare for this event by building an emergency fund of 3 to 6 months of expenses where you can sustain yourself if you can't work for a period of time. The reactive approach is you don't have an emergency fund. You have to rely on savings, family support, or access to your retirement plan to get the dollars to support yourself. So that's dealing with a personal injury. The second is reviewing your insurance coverage. Sure, we all need to understand investment risks, how much do we save, those types of issues. However, insurance is just as important because it provides financial support if we have a physical or a monetary loss. So the proactive approach, speak with an insurance agent to understand your insurance coverage, including the dollar amount of coverage you need for life insurance, health insurance, and insurance on your property, like your home or your rental apartment. If you don't have insurance policy in place or the amount that you have doesn't have enough coverage, you may have to use an emergency fund to cover expenses if you're disabled and repair a piece of property, your car, your house, your rental property if it's damaged. That's the reactive approach if you don't have sufficient insurance. And finally, divorce. 40 to 50% of marriages end in divorce. They can have a serious financial impact. Some couples have a prenuptial agreement to avoid the potential future losses. Facing the loss of your partner's income in a financial planning, you may simply panic. Again, talk to an attorney, talk to a financial planner. And in many cases, one partner's poor financial decisions may damage the credit rating of both parties. So speak with an attorney and a financial advisor. Create a plan, create a budget, separate your expenses between fixed and variable steps to cut your variable expenses every month so you can save. And finally, change is hard. The reason people don't diet, don't exercise, don't solve bad personal relationships is because change is hard. And sometimes we don't change until the pain of not changing becomes greater than the change itself. So do take the hard steps to act now, and you can avoid these issues. And if you want more information on accounting and finance, you can join conference room at this web address.